to it. Julia Lee, 10 from 10 in terms of the performance of this market. Quite incredible.
It was an incredible day on the Australian share market. We only saw a rise of 0.15%, but that was enough to see 10 consecutive days of gains for the ASX 200. And really post-2000, we've only seen 2 times where we've seen 10 or more straight days of gains on the market. And the last time was in October 2003, where we saw 11 consecutive days. What was a little bit disappointing on the market today is that we did see volumes pull back. Yesterday was a fantastic day in terms of volumes, with about $5 billion worth of stock being traded, but it looks like investors are a little bit more cautious today, with just $3.8 billion being traded. It was the miners that did well, the energy, the materials sector doing well on the back of high commodity prices. Oil prices were up 1.2%. We saw gold, silver, copper, lead all up at least 0.5% overnight. And with the market, I guess, making such a big run, we've seen some all-time record highs today as well. Commonwealth Bank was one, and we saw the highest price ever reached today. We also saw Amalgamated Holdings reaching an all-time record high, and the other one was CSL in the healthcare space. We also saw 52-week highs in stocks like Bank of Queensland doing well, James Hardie doing well on the back of those US housing numbers which were released overnight. Still signs of life in the retail area, with Premier Investments reaching a 52-week high and SEEK continuing its good run as well. So a fantastic day for the Australian share market, and I guess the investors hoping for a little bit of a reprieve, because there are a lot of people trying to get into the market and just waiting for this pullback, the market just continuing on.
The rotation, if you like, that we're seeing at the moment out of things like bonds, other fixed income sort of investments, and into equities as people look for that sort of greater return. I mean, is that something that you see happening? Is that something you expect to continue?
We are expecting that to continue in 2013. Bonds have had a fantastic run over the last few years, but it's going to be impossible to match over the next few years. We're already seeing interest rates in a lot of the developed countries virtually at zero, places like the US as well as Japan and Europe as well. So money coming into the equity markets. And also, if we have a look at the equity markets, it is forward looking. It tends to look forward around about 12 to 18 months. You've seen that with a number of the building product companies now. We haven't really seen a revival in the construction or the building market, and yet the shares have been running quite hard. So the market is forward looking. So it's not so much this earnings season that it's worried about. It's more looking towards FY14 onwards, where it does expect to see some good earnings growth coming through. Also, there's been a lack of bad news, and I think that's been a positive. This time is traditionally known as confession season. We haven't seen a lot of confessions coming to the market. The February earnings season will be important, but I think the market's going to be watching those outlook statements very closely, especially of the cyclicals. We've started to see them turn very sharply, so there is an expectation that we will see a turning in this cycle. We've seen the retailers running hard, the media companies running hard, and they've really been the big winners of 2013 so far, along with the market-related stocks as well, like Computershare, Perpetual, Platinum Asset Management, which have been running pretty hard this year as well.